Hi there, I'm Darren McDermott and you're watching Dukascopy TV for an economic update on India. Now, India's wholesale inflation hit a 5-month high in May due to rising food and fuel prices. I'm joined on the line by Dharmakirti Joshi, Chief Economist at CRISIL in Mumbai. Now, last week, India's new government got some better news on the economy as retail inflation dropped to a 3-month low. But high food prices have clearly made inflation India's Achilles heel. So do you think we will see elevated levels of inflation due to high food prices for some time? And how will potential fiscal reforms impact inflation?
Well, I think the inflation has come off a little bit, though, as you just mentioned, the wholesale price index inflation did rise. And that is because of essentially food items where inflation went up. Now, there are two things to watch out for as far as the future of inflation is concerned. Number one is the fiscal policy, which I think we'll get after the budget. And my sense is that fiscal policy will not be expansionary, but will be restrictive, less of government spending increase. So as a result, I think fiscal policy will be non-inflationary. Now, the second is what happens to food. Food is dependent to some extent on what happens to rains this year, and the monsoons are not expected to be that good. So if monsoons fail, and then food inflation could spike further. But government has already started taking some positive steps to curb food inflation. They are going to release the food grain stocks that they have into the market. I think that will increase the supply of food grains. And also, I think they are taking steps to ensure the lower prices of some of the vegetables, I think, where inflation typically spikes. And also looking at importing edible oils and pulses. So if they take these steps, then I think even with a bad rain year, I think inflation could still be controlled. I think so. It is an issue, but it's something which is not out of control as of now. And proactive steps from the government, some of which have already been announced, can keep inflation at the central bank target of 8% for this year.
And what else are you expecting to see in the budget?
The budget is essentially about fiscal consolidation. So first step I would like to see is whether they are able to how much they are able to reduce the deficit. The second is how are they going to reduce the deficit? Is it going to be through cuts in capital expenditure, investments, or is it how they are going to cut the subsidies which are already quite bloated? Then I think the third thing that I look forward to is whether the goods and services tax, which has been planned for several years, whether it will get implemented or what is the timeline for its implementation. The fourth thing is on the retrospective taxation, which has been a bugbear for foreign investors. I think they should abolish retrospective taxation, and we should expect some schemes there. The fifth thing is the previous government had focused on a lot of entitlement schemes, distribution of wealth, and so on. I think this government is planning to focus more on growing the economy than distributing the fruits of growth. So a lot of entitlement schemes will get rationalized. But what I mean by that is that if there is an employment guarantee scheme which is already implemented since last 3-4 years, that will get linked to asset creation and so on and so forth. I think that is what should be expected. And then finally, how is the government going to raise the revenue in a difficult year? So they will have to privatize, they'll have to divest, and we look forward to some positive news on this front.
Industrial growth also rebounded, but does this show possible improvement in the investment cycle going ahead on confidence building?
Well, I think as far as the industrial rebound is concerned, I think it's too early days to comment on how sharp the rebound will be. I think what we expect is a gradual lift in industrial growth, and we expect it to grow at close to 4% this year from near 0% last year. Now, investment cycle is going to take time to revive because there's low capacity utilization in the economy, and investment pipeline has reduced quite a bit. And on top of that, I think there's an issue of bottlenecks to investment, which the government is trying to reduce. By bottlenecks, I mean environmental clearances, getting the land, getting clearances at a fast pace. I think all those things government is trying to address, but for the investment cycle to actually kick in, it's going to take some time, and the capacity utilization will have to go up in the economy. Only then I think we should expect investments to revive. So we are not looking at investment revival anytime soon.
We are also seeing a fall in the rupee as a result of the deepening crisis in Iraq. Now, India's imports are nearly 2/3 of its oil needs, leaving its currency especially vulnerable to price swings. So where do you see the rupee heading in the short and medium term?
Well, I think rupee will remain volatile depending on the global events, but we expect it to hover around 60. I think that is the fair value, and it should, even though it remains volatile, it should come down to, it should have a tendency to converge towards 60. The oil is a pressure point because we import, as you rightly mentioned, a lot of oil, and we are quite vulnerable to global price movements. So, but I think the good news on the external front is that our current account deficit is quite low right now and is within the comfort zone. So even if it expands, it's not going to expand too much. So our vulnerability as far as the foreign inflows is concerned is reduced a little bit. So we would expect currency to remain more stable this year than last year, unless I think there are huge geopolitical events that completely spook the investor confidence.
Thank you very much for your time today. Well, viewers, do stay tuned as we have plenty more heading your way, and I will be speaking about the SNB rate decision tomorrow, so see you then.